Let me show you how to choose a valid order block to trade.
After learning this, you will not need any order block indicator.
Oh my God!
In Tradingview, trust me. Kindly pay attention. In this video you are going to learn. Number 1. What order block is in Forex? Number 2.
Conditions required to consider a very valid order blocks.
Number 3. How to effectively mark them on charts. Number 4. How to trade them. Let's start by defining an order block in Forex. So what is order block in Forex? An order block in Forex trading refers to a specific price level on a chart where a significant amount of buying or selling activity has occurred. It is often seen as a key level of support or resistance, where traders believe that the market is likely to react when price revisits that level. Order blocks are formed when large institutional traders or market participants place their buy or sell orders at a particular price, causing a cluster of orders to accumulate. These blocks can be identified by analyzing price action and volume data. Traders often use order blocks to make trading decisions, as they provide valuable information about market sentiment and potential price reversals. By recognizing order blocks, traders can anticipate potential areas of market interest and adjust their trading strategies accordingly. Understanding the concept of order blocks can be a valuable tool in a Forex trader's arsenal, helping them to identify potential areas of support and resistance and make more informed trading decisions. Let's look at the conditions required to consider an area of valid order blocks. Some of us have a problem identifying valid order blocks. And that's why any order block strategy you know doesn't work for you. So write this down. Order blocks on higher time frames indicate high probability order blocks, and for them to be valid, they must sweep liquidity and cause a market structure shift. Consecutive bearish candles after a move down indicate a high probability order block, and entry points can be found by taking out liquidity and observing market structure shifts, especially during kill zone hours. Look for consecutive bearish candles followed by a market structure shift and the last candle taking out liquidity to identify high probability order blocks, focusing on candle bodies and not wicks for increased risk to reward and potential inducement. When the price hits the real order block, many traders will move their stops to break even, causing them to miss out on potential profits. Look for market structure shifts and the last bearish or bullish candle that takes out liquidity to identify high probability order blocks for potential trades.
Let me show you how to choose a valid order block to trade. Here, we have continuous break of structures, so the market is in a strong downtrend. As you can see here, price couldn't break the recent lower low, and made this tiny pullback to the upside. After gaining enough momentum, price is pushed to the downside with imbalances and has made this break of structure here. So, for me, this order block that is generated by recent BOS is an inducement and it's not valid to trade. However, this order block is valid and safe to trade. Place your order a spread size below the middle of the order block and target the recent swing low, and wait for the price to come up and activate your order.
Another way to identify a valid order block is by observing a strong rejection of price at a particular level. This rejection can be seen as a sharp reversal or a prolonged consolidation period. It indicates that market participants have shown a significant interest in that price level, suggesting the presence of a valid order block. Another factor to consider is the volume traded within the order block. A valid order block often exhibits high trading volume, indicating the involvement of large market players. This can be observed through volume indicators or by analyzing the size of the price candles within the block. Lastly, it is important to consider the context in which the order block occurs. If it aligns with other technical analysis tools such as trend lines, Fibonacci levels, or moving averages, it strengthens the validity of the order block. In conclusion, a valid order block in Forex trading can be identified through a combination of factors. These include a strong rejection of price, high trading volume, a significant duration, and alignment with other technical analysis tools. By analyzing these indicators, traders can make more informed decisions and potentially capitalize on the opportunities presented by valid order blocks. Let me hope you have learned something. Subscribe to this channel. Success in everything you do. Count. No working hard.